Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. This is not your get rich quick channel. This is not big lots, tiny profits channel. This is not your skippity scalpity 8 pips a trade. Nope. Instead, we want our trades to be worth more, based on technical analysis for more than the next 20 minutes, right? But also a sound understanding of fundamental analysis, things like central banking policy, monetary policy, fiscal policy, macroeconomic, global money flow, all that kind of stuff. So, great. Now you can scalp, I have no problem with that, but it will mess up your numbers. Remember the universal truth. Okay, keep your losses small, let your winners run. So if you're only grabbing 8 to 12 pips at a time, it just, the math doesn't work out, that's all. But you can incorporate it, but the thing is, if some of your trades are 100 pips and some of your trades are 8 pips, the average just is mediocre. So I don't know, maybe that's what you want. Maybe that's what you want. I don't know. It'll kill your Sharpe ratio. How about that? It'll kill your Sharpe ratio if you don't let your winners run. So anyways, hey, ask questions. If this is intriguing to you, you're like, wow, this is great. Wow, a YouTuber that is not promoting get rich quick nonsense. Yeah, well, if you like that, A, subscribe, B, participate, ask questions, C, take notes, and then document your notes in the comments below the recordings. And therefore, you can customize your experience here at Forex.Today. How do you do that? Well, you can search your comments. So if you're like, what was that day he talked about the reverse repo market? Oh, well, you just go into YouTube, search your comments, go reverse repo market, and you'll find the video that you left the comment on that documented that that's what I talked about in that video. And if you leave a timestamp, then you could even just click that and it takes you right to that video or that part of the video. So, dude, you could really take control of your education, okay? You could really take control of your Forex education by simply participating. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey. So my name is Wayne McDonell. I am a currency trader just like you. I have a passion for trading. Before that, I was a venture capitalist, which means you would put some money into a project and maybe in 5 or 6 years, you got to find out if you lost money or not. It was a cool job, man. It was a really cool gig. Imagine that I was basically a Shark Tank guy, except that a lot of that stuff's nonsense. But anyway, so we always invested it into patents and stuff. But whatever. Just imagine that. Or as a high-tech entrepreneur in the Silicon Valley, once again, I helped people raise millions of dollars, and I tried to do it myself. I had a really neat startup, actually, before its time. But anyways, all of that was the same kind of thing, like you throw all your eggs in one basket, and maybe in 10 years you're a billionaire or broke, okay? So this idea of being a Forex trader where you're buying and selling money, money is your product, money is your service, right? That the government, when you're a Forex trader, actually treats cash in your account as inventory. How cool is that? I'm like, that's so smart. So this is like the purest form of business. And as an entrepreneur, I love it. The idea of the purest form of business, buying and selling money. Not a substitute for money. We're not exchanging money for a cup of coffee. We're exchanging money for money. I'm like, oh my God, that is so amazing. I like to call it the second oldest profession. You can probably guess what the first one was. Okay. Anyways, so I love what we do. I even in my 40s went back to college and got a degree in macroeconomics. Shows you my sort of passion. That's a big deal to go to Harvard for 5 years to get an education in macroeconomics, even though I knew it. But hey, man, right? I took an advanced macroeconomics class And my professor was an acting senior, what was he? Senior person at the Fed anyways. What do you call those guys? Anyways, he'd work at the Fed all day and then come to Harvard and teach a class. Taught me. And the guy was not so crazy smart. So anyways, yeah, I'm passionate about it, and I know many of you are, so that's really cool. So thank you for being here. Thank you for being in my life and providing positive energy every single day. I get out of bed, and the first thing I do is think of you, and then I check my phone to check the markets. So very cool. So thank you for being part of that. I'd like to invite you to visit Tradersway.com. You're going to need a broker. I'm telling you, they earned my loyalty and respect a long time ago, not through an ad, not through cheap spreads or whatever nonsense that the BS brokers attract you with, but instead their actual behavior in a time of crises, where big brokers went out of business or lost hundreds of millions of dollars, apparently maybe because they were trading against their clients. That never happened at Tradersway, and I'm like, I like you guys. There's the spreads are competitive. If you rather have ECN than a fixed spread or a variable spread account, you can have an ECN, but the ECN fees are very competitive. They're not the cheapest. Why would you want the cheapest? Why would you want the cheapest? It just doesn't compute for me. But anyway, so you want quality, you want value, and of course you get that at Tradersway. So, but ultimately too, the fact that they pay you huge swaps. It's just part of currency trading. You deserve the swaps. You're making investments and you get paid interest. Lots of brokers, and I just saw one a couple of weeks ago, a big, well-known broker in London, and they're charging negative swaps. So like they might owe you, let's say, let's call it, instead of earning money, let's say you're in pips. So let's say you're deserved, 3 pips a day. You're like, that doesn't sound like much. Well, you earned it, and 3 pips on $1 billion. Okay, it adds up, man. So, anyways, you look at it, and you deserve 3 pips, and then they find out not only do you not get your 3 pips, that they charge you negative 5 pips. So now you should have got 3. They charge you negative 5, so the differential is 8. And you're like, dude, that's not cool. You're down 8 pips every day because they're not treating you properly. They're squeezing from you, and they're like, the guy's an idiot anyways. He doesn't even know what's happening, so who cares? Dude, you should care. What kind of business does that? It just doesn't make sense. So Tradersway, if you're owed a swap, they pay you the swap like they should. So I'm like, dude, the behavior is what I like. I don't like promises. I don't like surveys, right? Like, me when I go through the news, like, oh, what's consumer confidence like? Who cares? Okay? And by the way, here's what is actually happening right now. They do a consumer confidence type survey, and there are several of them, and they'll ask a person, how do you feel about the economy right now? Oh my God, it's crazy. And then you look at retail sales, they're spending money like crazy. So like they'll say one thing and do another. I don't care about what they say or think. I care about how they behave. And so same thing, like Tradersway's and their behavior is what earned my loyalty and respect. Not empty, open, lame promises like all the other brokers, but legit behavior. Thank you, Tradersway. So visit Tradersway.com, open up that demo, give them an opportunity to earn your loyalty and respect as well. Okay. Hey, ever looked at a range buyer strategy? No, it sounds stupid to me. All right, cool. Why don't we just learn how to trade properly? Okay. All right. Coolio. So here we are. Okay. Here he is. Oh, and go back to whoever said, have you ever heard of a pin bar strategy or whatever you just said? Why don't you start with price action? Okay. Don't copy some nonsense knucklehead ideas. First of all, you need to learn how the market works, right? That things like, some people call it market structure. You can call it whatever you want. But this idea of where support and resistance forms, dude, you need to know that. If you don't know where support and resistance is, you don't know where to enter, and you don't know where to exit. And why should you exit? Because the other team is going to challenge you at those prices. So you might want to say, well, if I'm a bear, I want to sell here and take profit there. How do you know that? It's just how you just need to know how to trade. So stop, I wouldn't go into like, whatever strategy you mentioned. No. Let's just worry about, first of all, basics like how price behaves and where it behaves, so you know where bulls sit and where bears sit. You start from there. Okay? And then after that, you can do whatever you want. Okay? I like leading indicators more than lagging indicators. That's just me. All right. Cool. Okay? Boo, 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 boo. Boo, 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 boo. Do I work for Tradersway.com? Yeah, I'm the chief market strategist. All right, thank you for doing the poll. Look at that, 100 people already. That is crazy. Thank you for doing that, everybody. Okay. Thank you for doing that. Okay, what's on your mind? Nobody cares about Bitcoin, huh? That's a little surprising. Okay. Gold? Nah. Not many people care. Well, that's not your prime concern. Okay, that's interesting. Yen, 31%. Dollar. Wow. Okay, cool. So let's just start with dollar. But again, thank you for participating. Okay. All right. So we'll look at the dollar here. There was some give back and uptick. Now, does this exactly paint the picture of what happened on Friday? Is that exactly how you remember it? Oh, dollar just crashed across the board. What you probably saw was euro dollar way up on Friday. Holy smokes. Pound dollar. Okay, you probably saw somewhat up. And wasn't everything else down? Basically, XXX over USD. Wasn't everything else generally down? It's weird, right? So, is there something wrong with this index? No. It's just math. So what happened was euro is equal to 40% of all Forex activity, according to the Bureau of International Settlements. It's a central bank for central banks. Isn't that interesting? Did you know that central banks have central banks? Okay. And then pound dollar, I don't know, I don't have that one memorized by heart, but let's just say it's 20%. So these things went up and it made the dollar index look like it was falling. But really, these were rising, and because the basket is so weighted that it looked like one thing, but you may not have right? You may not have observed that. You might have been trading like USDCAD and you're like, what the hell? Dollar wasn't weak. USDCAD was straight up like a rocket ship, right? So you're like, that's weird. Well, it's not a glitch in the matrix. It's just what the math is. Okay? She says, is it because of the start of the Santa Claus rally? You know, a 3% drop in the stock market and a 12% drop in the oil market is certainly no Santa Claus rally. So Thursday, Friday is an example of a Black Swan event. Okay, not seasonality. Okay, so, right? Cool. So yeah, so Swiss franc went up. And what that typically, when you see that, it's a risk off, safe haven flow. Yen up, risk off, safe haven flow. And dollar up, safe haven, risk off, flow. Okay? Aussie came down, Kiwi came down. Okay? once again, let's put this sort of like a circular flow chart, if you will. Okay? One of the things we're watching is China, because it's still the manufacturing center of the world. And who are the biggest purchasers or customers for China? USA, Europe. Okay? We'll dumb it down. That's about what? 700 million people? Okay? So that's interesting, right? So, with the new COVID variant, we already know Europe's in trouble. Austria's already shut its borders. I wouldn't be shocked if Germany's next. The variant could get worse. Doesn't seem like Europe did a good enough job or whatever. I don't know. Maybe it's not their fault. Maybe it is their fault. But what if Europe comes offline and just like stops buying stuff? Because the borders close. When the borders close, you stop trading with other, with partners. So the next thing that happens is you will run into shortages and prices will go up. Oh my God, that sounds like what happened in the United States last year. Well, yeah, it wasn't necessarily like Trump putting tariffs on things. In this case, it was literally shortages created from COVID, which is the same thing. If you're not trading, it's acting like there's a tariff. It's acting like the borders are closed. But if Europe actually shuts, like let's say Germany shuts its borders for just right like a lockdown. If Germany goes into lockdown like Austria did, it's going to have negative consequences to, let's say, the business cycle. Well, certainly the flow of capital. Okay? So anyway, so that what'll happen then is China will buy less natural resources from Australia. Okay? Interesting, right? Cool. So I want you to think about that because right? This goes around and around and around and around. So all of a sudden, if there's a blockage, you have a heart attack, an economic heart attack. Cool. Now, did you notice that euro was strong? Okay, what we're looking at is this. Oops. Okay. So if Europe is going into a lockdown, so this is Friday that we're talking about. It's amazing, right? Chances like iron ore, gold, but if there's a decrease in consumption, it's not a supply and demand of an individual commodity. It's the supply and demand of the aggregate. So it'd be all things. Okay? Okay. So this is weird, right? Now, is euro supposed to skyrocket in a risk-off move like we had? And William, I'll answer your question next. If I don't, please remind me. No, risk off does not make euro go up. So you have to think about what was happening. The stock market, so I think the Dow at one point was down 1,200 points. That's a big bad day. And the euro went up. Why? Well, you have to think about who got out of the Dow, who got out of the S&P 500, who got out of the NASDAQ, who got out of the Russell. Apparently, a lot of Europeans. Isn't that interesting? Apparently, Europeans had more money in the American stock market than their own stock markets. Okay? Unless you think, oh, that is money flowing into what? The Italian bond market? The French bond market? Is that what you think happened? Or was that Europeans just cashing out and bringing money home? Part of this could be this idea that the rest of Europe goes into lockdown and you'll need cash because you won't be able to work. Okay? Or that the stock market at the all-time high is overpriced and it's time for it to come down significantly because the stock market is based on 6 to 12 months forward guidance. And then you find out, wait, forward guidance was based on the fact that COVID is basically over. Well, if it's not over, then it's overpriced. If we got to go through another series of lockdowns, then the market was priced wrong. Meanwhile, Europeans need the cash, right? If they're going into lockdown. So this is very interesting. I've been through many crises before. This is not my first Black Swan. But that is unusual. I can tell you that's unusual. Dollar strong? Pfft. Makes sense. Swissy strong? Pfft. Makes sense. Right? Yen strong? Pfft. Yeah, what'd you expect? Of course that makes sense. Euro up? WTF. Okay? So that's strange. So that shows us how the market was invested, which I think is very interesting. Okay? But, all right, but I don't believe that's people buying euros. You have to understand that. Maybe I wasn't clear based on some of the comments I see. No, you don't understand. You're thinking about it backwards. Okay? This move here apparently was Europeans selling the euro. You're like, well, why would they sell the euro? They were buying the dollar. Well, why would they buy the dollar? They were buying the S&P 500, which requires dollars. So if the S&P 500 is coming down and or Europe is going into lockdown and people need cash, guess what? They're not buying euro. They're exiting, okay, euro shorts. They're not like, oh, I'm going to buy euro and write up. No, they're just going to cash, dude. This was an investment, and now they're going back to cash. Well, the investment they started was in euro, so now they're going back to euro. Okay? Okay. Now, Aaron says, well, volume was increasing and Friday reversal was imminent. Look, right? Everyone's good at calling it after it happened. Hang on. Based on, let's just say, 20 years of research. Don't give me no volume nonsense. Okay? Maybe it's part of that, but you can't say, oh, look at the volume and, pfft. Dude, no. Okay. Based on 20 years of research, what you're saying with high volume increasing, okay, that was likely to happen in January. Not November. That you would just be flat out wrong. Okay? Most Novembers over the last 20 years, even with high volume, you get a higher volume and you get a stock market rally between November and the end of December. Okay? Yeah, you could call it. It doesn't make it right. You can call it like, it doesn't make it right. So it came down, but it would be a dumb call. And I'm not calling you dumb. You know, I respect you. You're here every day. But I'm just saying, like, dude, no. You can't just say, well, no, like, no, come on, dude. Okay? Now, the market was clearly bearish. Oh, for sure. But you can't say, oh, because of that volume, that means down and all that kind of stuff. No, I never said it was bullish. Okay? But anyways. Anyways. Okay? Okay. So there's a difference. Okay? So anyways. Okay? Yeah, well, Chand, yeah, that would be it. So this year clearly is different, right? And COVID is not fundamental. COVID is not seasonal. COVID is not technical, right? Or, right, Omicron. Omicron is different. So you can't say, well, if you look at the volumes and if you look at this and you look at that and you look at the open interest of this and all of that says this was coming down on Friday, that's just nonsense because this is an exogenous shock. This is a black swan where the WTO on Thanksgiving, thanks guys, comes out and says, oh, this is an emergency meeting and we're announcing something 10 times worse than Delta variant. Dude, that's what brought it down, son. and I'm not picking on you, Aaron, but I'm trying to make a point, and sometimes I use humor and sometimes I use other emotions. But the idea is, dude, you didn't predict anything. You know, you might have said down and then the market crashed, but that doesn't, right? That again, that's me like the shaman coming out. And I'm banging my staff on the ground and I'm shaking seashells and I'm like, bring me food, bring me jewels, bring me your virgins or I'll make the sun go away, right? And everybody laughs and I go, and the sun, right, goes black in the middle of the day and they're like, oh my God, give him some virgins, give him some food, give him some gold, right? And then it turns out, well, I just have a solar calendar and I know there's a solar eclipse coming, right? It's like I didn't make the sun go away. It's natural. It's normal. You can't call it that way. That's not what happened, right? That's all I'm saying. So you might have said it and you might have been prepared for it and you had all the technical analysis. I'm not arguing that, but be careful. Don't throw in the causation. You're like, that's what happened. Well, that's what it looks, but what happened was the World Health Organization scared the heck out of everybody. And maybe it's true, maybe it's not true. We don't know anything right now. Okay? We don't know anything right now. But that's what happened. So even if it was set differently, is what I'm saying, Aaron, right? Let's say it was radically different. It was set to go up. It still would have come down. Even if it was the opposite of what your analysis was, it still would have come down. Okay? So that's all I'm saying. So I'm not saying you don't understand technicals, and I'm not saying you're dumb, or I'm not saying anything. I respect you. But what happened is a different subset of what was happening. Okay? That's all. So, okay? Yeah, no, don't go there. Let's just stop. I made my point. You can't predict an exogenous shock, black swan. Okay, you just can't. So it happened, it fit your mold. Great. That's all. Great. You were just as potentially, because again, a black swan is unpredictable. It could have gone exactly against you, and right, and there would have been you, right? So, and then I still would have told you, let's say it did the exact opposite, Aaron. Let's say it just skyrocketed the market and you were short. I wouldn't call you an idiot. I wouldn't say, oh, you were so dumb, you should have seen this. No. It's unpredictable. Therefore, you got it right, but I'm not giving you credit. But if you got it wrong, I wouldn't have held it against you. I'm like, oh my God, that was terrible. Okay? So that's all. Just that's all. Okay? Excuse me. So, there it is again. All right. We had a question about CAD. CAD tanked. Okay. Let's, I guess we'll go to this one. CAD tanked. Okay. Okay. So we can zoom in here. That's 4 hours. So let's zoom in even here. Okay, that's a big bad day for CAD, right? Okay. And somebody asked, does this have to do with oil? Oil on Friday. So oil fell for 2 weeks, right? 2 weeks down for oil. And we were just talking about how that proves to me much of inflation, not all of it, but much of the inflation is indeed transitory. Okay? Hang on, Nelson. Let me read your question in a second. Let me finish this thought, okay? So on Friday, after 2 weeks of down, I think it might have been even 3 weeks of down for oil, Friday dropped another 12%. So the question was, did oil cause the Canadian dollar to weaken? Uh-huh. That's my answer. Uh-huh. Cool. And by the way, trading USDCAD or CAD yen is cheaper than trading oil proper. So you could trade a highly correlated pair, okay? And maybe, right, have lower costs, but you might also earn interest in certain times, you know, in certain conditions. Maybe not now, the differential's not there, but what about in 5 or 6 or 7 years? Imagine you were, let's say, selling USD-CAD. Let's say the interest rates in Canada were higher than the United States. So you'd be selling that. As oil's going up, you might be selling USD-CAD down and collecting a little bit of interest instead of paying interest. Plus, right, the fees are cheaper, but you're actually getting paid a little bit more, and it might be interesting. You might make a couple of extra % a year just because you're trading a highly correlated pair, in this case inversely correlated, but it doesn't matter. And so you might be trading oil, but actually, right, you might be trading oil up by selling USD-CAD down. Okay. Chen said some analysts say on Bloomberg say inflation was transitory. Well, that's why you have to do your own research. And even today, I still hear it. I'm like, really? Okay. Now, if things get shut down again, if we go into a global lockdown, even if it doesn't include the United States, so let's say China implements zero tolerance, right? Zero tolerance. Okay. So China shuts down. Okay. Inflation goes up. Okay. Why is that? Well, you have to pay an American to do something. That's it. It costs more money. That's why global trade's good. I listened to the CEO of one of the major pharmaceutical companies, and the reporter asked, why is so much research and development done in India? Or no, it was manufacturing. Why do you manufacture all your pills in India? And he said, well, right? He said, the average Indian makes something like $3,000 a year, dollars. Okay. And we're paying something like, I forget what it was, $27,000 per year. It might have been more than that. I can't remember the exact number, but I'll make a point. So like the average Indian makes $3,000. But we're hiring people, right? But we're hiring highly educated, highly skilled people. So, right, they're making basically 10 times more than the average person. Cool. In America, to get the same person with the same level of education and skill is going to cost, on average, $120,000. Oh. Cool. So do you want to pay 500% more for your pills? No, then shut up. At least that's what he should have said to the reporter, because the reporter was kind of leaning in like, that is so bad, you should buy America. No, you should buy efficiency. You should buy capitalism. America's great. Okay? America should make bulldozers and jet and airplanes and biomedical innovations. It's a highly developed, highly skilled country. It should not be making beanie boos. America should not make folding beach chairs. America should not be making electric scooters. Okay? America should not be making gas barbecues. Americans shouldn't be making Bart Simpson t-shirts. Have a cow, man. Okay? Americans should be making highly skilled, highly technical, very value-creating products, not commoditized products. So the medicine might have been developed in a lab in the United States, but you can hire a PhD in India to work in the laboratory to make the pill. And that person is way better off. They're making 10 times more money. Cool. That's how capitalism works. So anyways, so if the border shut down because the government says, we don't like China, we're not going to do business with them, prices go up. Or if China says we're shutting down all our activity because we're hit with COVID and we're going to have a zero tolerance, so we're going to shut the whole economy down and get every single person vaccinated, by threat of, death by firing squad. I think a communist might do that. You get it or we shoot you. All right, I'll take the vax. Okay? So if that happens, so guess what? Prices go up. It's the same thing. You're not trading, okay? Trading goes away. Okay? Okay? Oh, yeah. All right. So anyways, so you can see this is oil collapsing. Cool. So one thing hang on. I forgot Nelson's question. So that said, Wayne, should one be worried about potential dollar bearish seasonality? And what do you mean worried? It's supposed to be. Dollar was supposed to be weak at least half of November, usually more. Okay? Going back 5 years, for example, one of the things I talked about at the beginning of November in my swing and day trading groups is Kiwi dollar, on average, over the last 5 years, goes up 2%. Well, we know that didn't happen. It was down. I don't know, down what percent? I don't know. Who cares? But not up 2%. Now, I was trying to get, I bought this several times at good levels of support. Didn't work out. Then I waited and bought it a couple of times after some technical reversals that pointed up. Then that didn't work. Meanwhile, I'd cut my lot size by 2/3. And then I just walked away completely. Okay? That's really too bad. Yeah, I know, right? So it's supposed, right? Dollar in a normal, this is not normal now. Okay, you would expect something like that for this month, and that didn't happen. The opposite happened. Okay, so that's unusual. It's okay. It's okay. Now I have to incorporate some new information. Okay, Omicron. Okay, is it real? Meaning, is it a real threat? Is it real threat? Because now I'm hearing, yeah, it's super, super, super contagious. But now I'm hearing like people don't get that sick. I'm like, what? I was hearing it this morning. Apparently they're like, yeah, it's super contagious in South Africa, but everyone that's sick in South Africa with the new variant is mildly sick, which actually, no, not vodka, on the month. So they get mildly sick, which actually now makes sense to me because you think about it. What's the perfect virus? The perfect virus is the one that spreads like wildfire. Nobody knows they're sick. Now, maybe they have some mild symptoms. They don't feel good, but they move around and infect more people. Like a bad virus kills everybody. And a bad virus is easily curable. So how about the one that isn't very easily curable, but spreads through the entire population of the entire planet and lives on forever? Kind of like the flu, right? Meda says all germs are contagious. Yeah. But the thing is, that's actually the most developed virus, is the one that the host doesn't even know it has it. And it lives on forever. So I'm like, well, maybe this is good. I don't know. But I'm like, so I'm learning more. Is it a real threat? Or should I just be mad at WHO for scaring everybody, right? The World Health Organization. Okay, will economies close? Okay, will trade fall? And none of this was part of my thesis. Okay, what I told you a year ago for 2023, we will have lower growth rates, okay, and higher, but low. That's a low inflation. Okay, that's what we talked about more than a year ago. I even talked about it probably a year and a half ago. I did something called Off the Charts with Wayne McDonell, and we were drinking whiskey, smoking cigars. It's recorded. It's on the Fxbootcamp channel. And I was talking about how like GDP was going to go to 6%. And all that kind of stuff, even though GDP was stuck at like 1%. I'm like, yeah, we're smoking cigars. Yeah, in a year, GDP is going to be at 6%, smoking, blowing rings in the air. Dude, like, all of this is quite predictable. So having a resurgence, well, we don't know. Is it bad? How bad? What will the impact be? But if everybody gets the new COVID flu, let's say it's just the flu, lots of people get sick, and yes, it's bad for economics because someone doesn't go to work for a week because they go home. This is how it works in Canada, by the way. Once a year you get the flu, you sit on the couch, you watch game shows, right? And you drink some tea and you have some crackers, right? Maybe you vomit a couple of days, and then you sneeze for a few days, and then you feel drowsy and weak, and you've lost some weight. But a week later, you're back at school, you're back at work, or whatever. Okay? So what I'm saying is what Russ is kind of saying. I don't know how bad it is. So I hired somebody yesterday, a PhD, okay, whose thesis is on the surveillance. How do you spell surveillance? Surveillance. Wow, that's terrible. Right, it was some sort of fancy doctor surveillance, like sort of internal tracking surveillance. It was something surveillance of COVID variances. So his PhD is basically studying how to track variations and mutations of COVID-19. No joke. So I hired him, He started work yesterday. He's already reported some information to me, and he'll be working over the next several days or the next several weeks, gathering information for me. Okay, for me about Omicron. Now, let me ask you, does that sound like smart money? I mean, I don't want to rely on newspapers. I don't want to rely on CNBC. I don't want to rely on Bloomberg. I don't want to rely on Barron's Magazine. I don't want to rely on Fox News, CNN, my neighbor's opinion. So this doctor will report to me probably twice a day, keeping me updated on what the facts are. Okay? And he will be going, he will read the reports from the World Health Organization. He'll read the reports from the CFDC. Okay? He'll read the science in the reports, summarize it for me, and then I was strict. I said, I want every single opinion that you give to me about what you read from these reports, and I want you to cite your sources in MLA formatted bibliography. I only want your summary of what was said, and I want to know who the hell said it. Nothing but the facts. I did that. Done. Okay? Cool. Now, David said, hey, Wayne, I'd like to thank you. You gave me advice that led me to quitting Forex. You said if I wanted to trade the oil market, I need to know everything about oil. So I did that. Is you quit Forex and focus on that. Oh, that's awesome. Now all I do is focus on OPEC, interest rates, US, in the US, Canada, United Kingdom, and so much less stress. Well, yeah, and you're adding more value though too, right, David? So maybe, David, you could work for me one day trading oil. Okay? So what do you think, guys? Was that a good move? Okay? Just like your essays that you write. Yeah, well, Harvard... The first class you take when you join Harvard is how to write in the Harvard style. Okay? And so if you don't format correctly, you're fired. Okay? Go to Cambridge Community College. Okay? Okay? Cool. So anyways, then as your mentor, maybe... Again, I think actions speak even more loudly than words. So that actually happened. That's actually happening right now. Okay? So I'm trying to be the smartest money possible. I'm not trying to outsmart the market, but I don't want to risk a penny if I don't know exactly what I think is happening. I don't want to hear anybody else. Mark says, establishing a good relationship too. Well, let me tell you, I've interviewed 5 people for the spot. 2 of them were actually practicing doctors. 2 of them were practicing pharmacists. And then this guy was a PhD. But what led me to it is, PhDs are research. They're academic research people. They're not necessarily in the field jabbing people with needles and stuff like that. But they're in research mode, okay? And the second thing is this thesis is specifically on how to track mutations for COVID-19. So it's it's exactly the guy I need because this is a new mutation. And so just because you're a pharmacist doesn't necessarily mean you understand to his level of degree of the genetic science behind the variations. and mutations, right? So I'm like, this is my guy. That's all. Okay. Cool, right? By the way, all done within 24 hours of this happening. Right? Just boom. That was my move. Okay, cool. So, whatever. All right. Yeah, let's look at commodities. Okay. Holy friole. Yeah. Yeah. Okay. So, oil's coming down. It's one of the things we talked about Sunday night was that we are at fair market value for oil. So I basically said, you have to decide, are you going to 60 or are you going back to 80? Okay? So if we learn that this is a real threat, there are definitely concerns that we need to worry about. Meaning, you don't even need concerns, but like, it does seem to be bad. People are dying. All of a sudden, we're like, oh no, this might be a problem. Okay? Then you might want to look at something like that. And this is the down to 60 would be based on economies closing. So don't focus on the death rate and don't focus on the humanity part. You can do that on your free time. But when you're working, you want to focus on the economics. Okay? And if trade shuts down because economies close, okay, that's demand destruction. Okay? No, trade, not my doctor. I didn't go to like the clinic like, thank you, Dr. Roger. Hey, do you want to make some money on the side working for me? No, no. But, and to be fair, he's not a doctor yet. Okay? He's working on his PhD thesis. Okay? Yeah, Greg, I get that. It depends on how it happens. Also, it depends on the seasonality, Greg. So you have to realize that, like, let's say October, November, and December, I'm thinking one way. Okay? For example, August, and July, I'm thinking another way. And January, February, March, I'm thinking another way. Okay? Okay? Let's say I'm just categorizing these. Okay? Now, you might go back through, right, Greg? And again, Greg, I'm not saying you're wrong. But what I'm saying is my thought process. Okay? So it's like a basic thesis. I get, right? I have a basic thesis, and a basic thesis. Now, inside of this, I would say for dollar, for example, let's say sideways, dollar down, and then dollar up. Not oil, dollar, USD. Okay? In fact, I can erase that and make sure you're not. You guys know you have an erase function, right? Do you see that? The new function on MetaTrader where you can erase things? It's cool, right? Psych. All right. So, here's the thesis. Now, what you may be encountering, I'm not saying this is 100% true, but it may somewhat be true. Okay, Greg? That inside of this, you might say there's a taper through this period. Okay? Yeah, I agree, Meta. Yeah. Okay? There's a taper. And what this might show is, in these periods, there will always be dollar strength. And in particular, in this period, dollar strength. And in that, you could see dollar strength, especially on the aggregate. where you can say, well, generally true. If this is, let's say, sideways, let's say half the time it's dollar strength up, and then 1/4 of the time it's dollar strength up, and let's say 3/4 of the time dollar strength up, this is going to record that dollar strength. So again, I'm not saying, no, that's wrong, Greg. No, you're probably right. But what we need to do is inside the aggregate somehow squeeze blood from the stone and make some money, right? So yeah. And really what's probably happening there is it's not the taper, but it's the global conditions around the taper. So the Fed raises first and then everybody else follows. Okay? That's the other part, right, Greg? We know everyone sits around, all the central banks sit around waiting for the Fed, right? New Zealand didn't raise interest rates until the Fed tapered. Okay? So, now that the Fed has moved, so we're in that period where the Fed has moved first. Now the next part of the period is the rest of the world has to catch up and then surpass. And that would happen in normal, healthy market conditions. So now, once again, I don't know anything about Omicron. It might be the worst thing ever. It might be hyped up. You know, remember, Trump hated WHO, right? So maybe there's something to hate. I don't know. I don't know WHO that well. Okay? I don't know. I don't know their personalities. Maybe I need to spend some more time getting to know the WHO. But if they just scared the bejesus out of the world and cost, I don't know. How much did that cost on Friday? Trillions of dollars, right? Like, dude, if they just freaked us out for no reason, I'm going to be pissed. Okay? So I'm walking into this saying something clear. So let me say it clear just to make sure it gets done. 1, my thesis up until Thursday, so the last time I met with you guys on YouTube, my thesis for the entire year of 2021 was this. 2022, much of COVID would be behind us, maybe not all of it, but much of it. Global macroeconomic conditions would be improving. Meanwhile, inflation would be seen as more and more transitory in most cases, not all cases. But next year, 2022, would be a growth year, stock market up, bond market down, and economies around the world opening, not closing. But I have to have a thesis. And I had all kinds of evidence that I was generally on the right course. Okay? Now, that's that. Omicron comes along. I might be wrong. Or not wrong, but my thesis might need to be adapted because a new variant has come along. It was WHO that did this, so I have to listen. Because even if they're wrong, the world is listening and freaking out. And right, Israel's shutting down. Austria's already shutting down or shut. Maybe Germany's on the brink. I don't know. And all this kind of stuff. So I'm still in the process of I don't know. But I'm not sticking to my thesis because this is new information. Not that I was wrong, but things have changed. But I'm at the point where things might have changed, but I don't know jack. And I'm not going to take risks based on what I hear on CNN. I'm trying to be the smartest money possible. I want facts because I'm smart enough to make decisions. So that's cool. So I'm not going to cling to my old thesis, but I also have to realize that the market, now and this is for everybody that hates all my fundamental nonsense, right? Oh, that's all crap. Everything's in the price. Well, right now I'm paying attention to the price because fundamentals may have been thrown out the window. I don't know. But also, the emotion is real. Have you ever told somebody to stop panicking, that they're overreacting? Dude, what's the response? It doesn't cure anything. The emotion is real. The panic could be real. It doesn't even have to be like, right, the economy is going to close and everyone's going to lose their jobs and all that. Like, you could say, well, that's not going to happen, or at least not today, right? But the thing is, it doesn't have to be real. The emotion, the fear is the reality that I need to pay most attention to. So I am paying very, very, very close analysis or attention to technicals on even small time frames, because I'm not going to just throw trades on my thesis of global macroeconomics expansion. Well, I'm not going to take a long shot like that and buying a falling market. I just don't do that. Okay. Meanwhile, I got to be careful about selling, because we might find out that the response was overblown. So I'm trying to be as smart as possible, right? So we can survive this and get to a better level of normality where we can have an educated conversation on the real risks. But you can't have an educated conversation with someone that's drowning, because they're panicking. And panicking people drown. And what they'll do is clutch onto you and drag you under with them. Okay? So, I hope that's helpful. Oh, I also got my booster shot. I got my third booster shot. Why? It was something I could do. Am I making a political statement whether you should or shouldn't? No, I'm not talking about you. This isn't about you. What I did on Friday is I hired a doctor to do research for me, and I went and got a shot on Friday. Friday morning, for crying out loud. Friday morning. Got my third zap. Why? I felt like I needed to do something. Okay? So that's all. I'm not saying you should or shouldn't. I'm just telling you what I did. Cool. Trade says, hiring a doctor, that's more than great. Cool. Cool. So again, I hope this guy, yeah, made. I was thinking of you, but I wasn't pointing at you. But yeah. No, it's just, like some people are so hypersensitive, right? It was like the Trump years where you go out. I would tell a Trump joke and people would get mad at me because they hated Trump so much. And I'm like, dude, it's a joke about Trump. You can just laugh. No, but I'm like, oh, whoa, dude. So anyway, I'm just, I'm just a Canadian boy from Saskatchewan. What do I know? Okay. So, right. So, whatever, man, I'm trying to get through this alive. I'm trying to get through this without losing money. I'd like to make money. But my Fxbootcamp Credo, going back to my book 20 years ago, I don't know how long ago it's been, 14 years ago. Okay. The number one goal was to not lose money. Okay. This is what I covered, no joke, 15, 16, 17 years ago. I would tell this to people. My number one goal, this is the Fxbootcamp Credo. I don't think I spelled that right. But anyways, the Fxbootcamp Credo. The number one goal is to not lose money. Now, I want you to think about that, because it defines who I am and how I think and how I trade. Think about all the other YouTube channels where their number one goal is to make a lot of money. I'm the exact opposite. I absolutely 1,000% believe this. Okay? Now what? The second part is, right? Remove your risk. Now, I say this differently over time, but the idea is like remove your stop, get it close to break even, at some point be able to lock in a minimal acceptable performance. But this is about risk management. So my number 2 goal is to manage risk as best as possible. Yep, capital preservation. So that means having a stop loss, moving your stop loss, and then, if you can, lock in some profit, right? But Jim nailed it because, Jim and I were trading together 15 years ago. It's the same stuff. I still believe this to my core. And then what? Capital appreciation. Oop, that's 2 N's. Okay? Let your winners run. Manage your risk until you don't have risk, and then let the winners run. Let the winners run. Let the winners run. Let the winners run. Let them run. You got it right. Let it go. Okay? And of course, I put this all toward planning, right? That's what trade planning does. Okay? But if you can't do this, I am 100% convinced over any reasonable amount of time, you will not be successful. Okay? I could not find anybody. So like if you're using MT5 and you open this up, you can get to signal providers, right? Okay? The MT5 signal, this is MT4, so I don't have it. MT5 signal providers. And you can pay money. Right? Has anyone tried this, by the way? Providers. Has anyone tried this? MT5 signal providers? There's thousands of people offering a service where you can just have them trade your money for you. Has anyone tried this? Thank you, Maida. And I take that as a very powerful compliment. Thank you. Yeah, for money. Yeah, usually what, $30 as a test, sure. Okay, there's thousands. I sorted it by return. I sorted it by drawdown. And then I sorted, well, I did it 3 times. So this is 1. I looked at like the top 20 that have the best, highest returns. Then I started over again. Then I said, okay, show me the ones with the least amount of drawdowns, but still make money, okay? And then erased that search and did a new search. And I did by number of followers because I thought the ones that are actually profitable and good traders would have a lot of people paying the money because you would never leave, right? Okay? Let me tell you, the best one I remember was something like this. The best one, the best, number one out of thousands of signal providers, had a Sharpe ratio of, you ready for this? 0.36. The best. And that's crap. Garbage, nonsense, loserville. No professional investor would ever put money into this. And this is the best one I can find. There's probably 2 or 3 at that level. What this means is for every $10 risked, okay, you got $3.60. That's the ratio. Oh my gosh. That is pathetic. El Crapo bad. Oh, they make money. You're not even fairly compensated for risk. No one in their right mind would ever invest. The minimum Sharpe ratio would be 1.0. It wouldn't be attractive, but it would be the minimum. And what does that mean? Your risk is, right, equivalent to the reward. So you're like, oh, you risked $10, made $10. But that doesn't tell you you're letting your winners run. What this means is, right, you risked $10, you got $10. Risk over return. Now, if you adjust your return for inflation or the risk-free rate of return, because very often, okay, right, you would take the return, subtract risk-free rate of return. So actually, your Sharpe ratio, if you did it that way, and many people do, then you would be back to 0.8. And that wouldn't be that good. It'd be like, nah. I mean, nah, you'd probably pass. You're like, well, I've seen worse, but okay. But because the thing is, if you just bought the 10-year T-note, you'd earn 1.5%. So you'd take the $10, you'd have to subtract $1.50. And now, what is this Sharpe ratio actually telling you? There are many different calculations, but this one is mine, right? There are many calculations for Sharpe ratio, but what is it trying to tell you? What if your average winner, okay, was $10. And by the way, like MT4 will show you this in the stats, right? And your average loser is equal to $10. Generally, what you're saying is you have a Sharpe ratio at or near 1. So you're like, it's kind of like break even, right? You're neutral. You're the beta. You're like, okay, well, you're not beating anybody, but you're not being hurt either. Okay? So what if your average winner was $10, but your average loser was 18? This is the thing. This is what I would find. Even with traders that had decently high winning percentages, what happened was their losers were bigger. No one will invest. Think of my credo 15 or 20 years ago. The credo was, let your winners run. So what I'm trying to teach you guys is have an average loser. Okay, I'll give this is right out of the day trading course. I want you to have an average loser of 33 pips, but an average winner of 99. And which means your average hold time would be between 1 and 3 days. Okay? If you're reasonably consistent, 50-50 or better, you'll have a really nice, healthy Sharpe ratio. I mean, you'll be the best on MT5. So, yeah, Demo Trader says, why not learn the skill for yourself? Well, that's what I'm trying to tell you. But I'm also trying to get across my point of view, because you could disagree with it. At least you would understand me. And you're like, oh, that's Wayne. He likes to have his small losers and he likes to have big winners. And to be able to do that, he's going to have some fundamental macroeconomic thesis and be able to combine both technical and fundamental analysis into a trade plan. But I think that's stupid. Okay, well, at least you'll understand me. Well, Milo says, will that make a Sharpe ratio of 3? It would, but then you have to account for your winning percentage and stuff like that. But if that's one way of looking at that is yes. So how about like a risk-reward ratio? Okay? But like Milos, here's another way of me saying it. You have to set up your strategy, whatever you're designing, right? Remember, I took a whole class at Oxford on this, on algorithmic trading, right? So if you're going to develop an algo, or you're going to analyze your own trading by developing a trading strategy for yourself versus a trading strategy for an algorithm, either way, you have to design it such that it could possibly do it. And from what I can tell, right, 99% of retail Forex traders don't have math working for them. They're on a fool's errand. Now, don't look. Now you get upset. Some people are going to get upset right now. Whoa, 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 whoa. You're like, but Wayne, I only trained price and I did way better than you in November. And this was, whoa, 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 whoa. I want you to be your best. I'm not talking you down. I'm not putting you down. Okay? I'm glad you're doing well with technical analysis only. Okay? I'm glad. And I'm glad that you had a good November. I really am. All I'm saying is, over time, I would like you to try to incorporate some of my ideas as well. And I think if you're open-minded enough to try, that in future years, you will do even better. Okay? So I have no hate, right? I'm not pushing one agenda and, pulling one agenda and pushing the other one away. No. But I do want you to improve, and I do want you to be as big and as best as you can. Okay? I'm trying to help. I'm not trying to hurt. Okay? Thiago said, this is what George Soros said. Well, I don't think he said it. I think everybody said it, but okay. But Thiago, let's put it this way. The Quantum Fund, which is Jim Clark and George Soros and a couple of other very famous traders, they were doing like 1,000% a year, and they were not scalping. Okay. Milos is a PhD guy. The best thing about a PhD student, though, Milos, is that they're starving, right? Students got no money. Okay. All right. So I'm going to leave it at that. The stock market's about to open. I got my mind on my money and my money on my mind. So I got to go, yo. But again, food for thought. I wish you the best. I want you to do what you're planning. I want you to think about what you're doing. There's a lot of uncertainty. Not everybody agrees. We've gone from not everybody agrees what the Fed is doing or what it means to like, what the hell is this Omicron? Okay? So, holy smokes, be careful. And don't assume you're right. Double check everything before you make a trade. Is it a good trade? I want you to think about it. Is this a good trade or are you trying to make a quick buck? Well, the more you lean on the quick buck kind of philosophy, the more you destroy your potential for the future. Instead, I want you to pretend you're a hardcore professional, a seasoned veteran that doesn't make mistakes. But when you do, they're small. Small mistakes, guys. Big winners. See you tomorrow.